To us, I think the real thing we have to recognize as we look at what's happening in the real world is that Wall Street is converging onto crypto, and they're choosing to do a lot of this work on Ethereum because stablecoins have completely changed Wall Street's mind about how useful crypto, as we've said, the stablecoins have created the ChatGPT moment for crypto because we're seeing consumers really use it in a viral way. Merchants are beginning to really love it, especially outside the US. And now banks are realizing it's actually a decent business model. We just saw Citigroup even just say that they're looking at creating a stablecoin, even if it's just to manage deposit base, but still it is really Wall Street converging onto crypto. And at the end of the day, a couple things are going to be important. Wall Street wants to find a chain that's operating compliantly in the US and where there's already a lot of real world assets, tied up and on the layer one. And that's why Ethereum, we think, is going to become extremely relevant over the next decade.
Well, you mentioned some of the, critiques that Ethereum has faced in recent history. And I want to talk a little bit about those. Two of them is that, Ethereum has become a little bit slower, a little bit more expensive. And as more Wall Street giants start looking at how to interact on the chain, do you think that Ethereum can keep up?
Yes, and they just have to create the right incentives, between the layer twos and layer ones and make sure there's just not too much gas out there and that we can absorb that supply. But I think that's where, these treasury companies are playing a pretty important role and they're earning money staking. And I think the reality is that if there is a rejuvenation of interest around any token or any token platform, it also rejuvenates people's creativity and interest in making it more usable. So to us, this ChatGPT moment, which is converging around Ethereum, I think is going to also help unleash a wave of innovation. It's no different than when ChatGPT first swept across Silicon Valley, and this is after everybody had invested decades on SaaS. But guess what? Now there's many, many, many venture-funded businesses around using AI and ChatGPT that are exploding and getting to a $100 million run rate so quickly. Well, I think that's what's going to happen in crypto. I think this is a really big moment for the industry to realize that as Wall Street converges and they're bringing a lot of interest and bringing a lot of new users and a lot of new applications, that this could transform actually the importance of smart contracts and Ethereum. So I think Ethereum's sort of, dominance could actually grow dramatically.
Everyone's talking about price. I think last I looked was up over 10%. What's your price target for ETH as we head into the second half of the year?
Our price objectives at Fundstrat. So I wear a couple of hats. I'm the chairman of Bittmine, but I'm also the head of research at Fundstrat. And actually I have a third role, which is the CIO of Fundstrat Capital. But at Fundstrat, Sean Farrell is the head of digital assets research. And he's given me some informal sort of targets. One way he thinks of this is that if we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum is closer to 15,000. And that makes sense. I think the layer one, as you get into layer one, you should apply a higher multiple to like sort of theoretical usage because it's the same reason software companies get higher multiples than retailers, right? The more getting away from the customer and the more it's pure signal, you apply higher multiples to that business. And so I think in the near term, our technical strategist, Mark Newton, thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. It just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a sig as well.
Talk to me a little bit about Bittmine's playbook when it comes to the Ethereum corporate treasury.
A lot of what our strategy has been disclosed in our press releases, so I'm glad to talk a lot about it. But to us, at the core is our belief that Ethereum is dramatically undervalued as a token. That and for the reasons I described, that crypto is seeing its ChatGPT moment, and really the second order beneficiary there is Ethereum. And so acquiring an asset that can appreciate by 10 times or more is a really good use of a treasury. In fact, MicroStrategy, when they began their treasury strategy, Bitcoin was 11,000 and it's 120,000 today. And so I think that's foremost where we're coming from. And some people say, well, why don't you just buy Ethereum outright? Well, an Ethereum treasury company can actually increase your holdings per share by taking advantage of capital markets and volatility to raise capital. And they can also earn money from staking. And for instance, Bitmain initially funded with $250 million of ETH, and then 3 days later, Bitmain increased the treasury holdings by an additional $250 million. So in just 3 days, doubled the amount of treasury holdings, and that was as of Friday last week. So you can see that there is an advantage to a treasury company because what you thought you had was of ETH relative per share just doubled in 3 days based on just the company acquiring more ETH.
For investors who have already maybe allocated into Bitcoin, the Bitcoin ETF, or a Bitcoin treasury company, and are now looking at similar products, how would you explain the differences? Because ETH is a little bit more of a complicated story, right? So if you were talking to an investor, how would you differentiate two?
And I think it's important for people to kind of have some framework in mind. We're still adamant fans of it because to me, Bitcoin is really the ultimate form of trust at the moment, and it is digital gold in an easy way. If someone says, well, what does that make it worth? Well, gold's 22 trillion network value, so Bitcoin should be worth it. And there's plenty of future businesses that can be built around because of its stability. Ethereum is a smart contract enabled platform, and so it is unique because you can actually store real things onto the block, whether you use layer 1 or layer 2. And I think maybe the real killer app, and this is what stablecoins are showing, is that as we move into a world of like AI and we're trying to create, units of pricing and to simplify the movement of goods and things, simple examples of like tokenizing things from the real world onto a blockchain, you couldn't do it really on Bit because that's not what Bitcoin's designed to do. So I think as you're thinking of Wall Street converging onto crypto and then AI innovations taking place and the idea of using even tokens or stable coins around that, well, then that's really when it comes to saying, well, Ethereum really is the largest smart contract platform in terms of network. And that's what makes it attractive.
If we think about that through a crypto lens, talk to me about where we are and where we're heading.
I generally agree with people who say crypto responds to global central banks are easing, then we should see it in crypto prices first. And that's why crypto actually is a leading indicator for the stock market. And the fact that Bitcoin broke out to all-time high is actually bullish for the S&P. But the interesting thing is that crypto is still not that widely held. Bitwise has a great stat. They say 95% of Bitcoin's been mined and only 95% of the traditional finance world doesn't own Bitcoin. So there's a real mismatch. And so I think Bitcoin continues to be the leading crypto asset to watch. But to us, as risk appetite recovers, Ethereum and small caps are pretty highly correlated. And I think that that's why Ethereum in percentage terms has more upside for the next few years.
Is there anything that you've been closely watching this week that I haven't asked you about? I know Bitcoin and ETH have been the real standouts in the headlines, but is there anything that you've been watching that you wish someone would ask you about or that you think is quite interesting that not enough people are talking about?
Well, I've been paying a lot of attention to earning. We're in the middle of earnings seasons and financials start to report in earnest, well, this week and next week, but there have been a lot of comments from these financials about stablecoin, and stablecoins are frenemies for the financial industry. So I think that's just something people have to watch out for because they are both a opportunity, but it's also a threat to their legacy business. So you have in mind that in some ways, the financial industry is one of the strongest and savviest lobbying groups, that they have a role in how crypto regulations pivot in either direction.
It's so interesting that you bring up this term frenemy because I think in a lot of the conversations I've had, they've been very positive. It seems like institutions, Wall Streets are really coming around to stablecoins, but you bring up a really good point there that it does kind of threaten traditional financial systems, what's already been built. What is the, enemy side of that? Is there anything that we should be watching out for when it comes to the adoption of stablecoins from the traditional financial sector?
I can give a simple analogy and then we can think about how it applies to the financial sector. But, let's take social media and Facebook. And let's say Facebook was the cash cow for Facebook, which it is for Meta, but then came along Instagram, which was a very different way for people to interact. And then TikTok came along. And as you know, TikTok completely caught Meta by surprise. And if Meta had only invested in Facebook, the company would be a dwindling business. But they, of course, correctly made the pivot both to WhatsApp, Instagram, and then to TikTok, with reals, etc. In financial terms, the banking industry has not necessarily been that quick to recognize that an increasingly digital world means money is increasingly purely digital, and it's actually breaking barriers. And then if we look at the next iteration, it probably blurs what is the definition of money. We've already seen that blurring loyalties, etc. And so banks make a lot of money from traditional financial systems. It's 4% of global GDP is earned by the system. And whether you look at interchange, Visa earns 2 to 3% for being in the middle of a merchant transaction. These numbers drop dramatically in a digital world where trust is established through the actual blockchain itself. So that's what we have to realize is what is like the TikTok moment for Facebook.